Liability for business debts. Sole proprietorships, partnerships, corporations, limited liability companies. Entity. Entity, a general word for a person, business, non-profit, government, etc. Similar to the word critter for animals. Google definition if this is not clear. If this word is used, the rule applies to sole proprietorships, partnerships, corporations, LLCs, humans, non-profit entities, any business or group. We will look only at these business forms in this PPT. Sole proprietorships, partnerships/joint ventures, corporations, limited liability companies, LLC. Rules. Rule: debts arise from torts, contracts, and taxes. Another name for debt is damages. Rule: all entities are liable for their own debts. Rule: all businesses are liable for the torts of their employees and agents committed within the scope of employment. Same rule, slightly different presentation. Humans are liable for their own debts including torts, even if another entity, such as an employer, is also liable. In the example below, both IANA and Otis Elevator Repair Service Incorporated are liable for the damages. IANA is an elevator repair person for Otis Elevator Repair Service Incorporated. She forgets to install certain wires in the elevator which cause it to malfunction and someone is injured. You do not have enough details but assume the jury says IANA's failure to install the wires was unreasonable. IANA is liable for damages under the legal theory of negligence. Rules for sole proprietorships. Rule: a sole proprietorship is not considered a separate legal entity from the owner of the business. The owner's social security number is used for tax purposes. Rule: the owner puts all income and losses on the owner's personal tax return, Schedule C. There is no separate tax form or taxing of the sole proprietorship. Rules for sole proprietorships. Rule: a sole proprietorship is an unlimited liability company, meaning the owners have unlimited liability for all the debts of the business. Rule: the owner of a sole proprietorship is liable for all of the debts of the business. Joe's Diner, a sole proprietorship owned by Joe, hires Leah as a waitress. Leah negligently injures customer. Joe is liable to the customer. Leah is also liable per rule on the prior slide. Joe's Diner enters into a contract to buy meat. Joe is personally liable for the debt. Rules for partnerships. Rule: a partnership is considered a separate legal entity, and must file its own tax return. It has a unique federal and state tax ID number. Rule: a partnership must file a partnership tax return. Rule: the partnership is liable for all the debts of the business. Rule for partnerships, same rule said 3 different ways. Rule: a partnership is an unlimited liability company, meaning the owners of the business have unlimited personal liability for all of the debts of the business. Rule: individual partners are jointly and severally/severally, individually, liable for all of the debts of the partnership. The injured party can collect from whoever is the easiest to get money from and can collect all the money from just one partner that is the easiest. Translation: each partner is liable for their share of the debt and also all of the debt if any individual partner or the partnership has no money. The injured party can collect from the entity with the money. Joint and severable liability. Careless and Careful are partners is a business called Racy Races that puts on street races. Careful is the bookkeeper and office manager. Careless plans and organizes the races. Spectators at a race were injured and a jury decides the organizing of the race was negligent. Careless, Careful, and Racy Races are liable. Another example. Jerome, Sheila, Gary, and Ella agreed to purchase a tract of land and operate a child care center called Happy Days Child Care Center. The playground area contained a swing that was improperly hung by Jerome, and a child was injured when the swing fell. Assume the jury determined that Jerome was negligent and that damages to the child were $25,000. Who is responsible for paying the damages? Answer: Jerome, Sheila, Gary, Ella, and Happy Days Child Care Center. Same example continued. Gary has always been very thrifty and has $100,000 in assets. Jerome has the world's largest collection of beer cans, most of them clean. Sheila and Ella live in a small house with their 17 cats and own a 2005 Toyota. Happy Days Child Care Center has a bank account with $200 in it. Gary can be compelled to pay the entire $25,000. Gary can turn around and try and collect from the others, but if they have no money, Gary is stuck, not the injured person. Another example. You are a member of the party committee. The party committee is composed of students in CMU's College of Business who decided that more parties were needed around here. You and the other members of the committee organize a New Year's Eve party at your parents' house because they will not be home for the holiday and won't know about the party. You ask the people coming to contribute $2 per person to cover the costs of the keg of beer. You do not expect to make any profit on the party, but if you do, you intend to spend it on another party. Continued. Joint venture. Libby was injured when she slipped on the frozen steps that lead up to your parents' house because no one cleared the steps or put down salt before the party. Assume a jury would find this activity unreasonable, that is negligent. Who is potentially liable for the injuries? Answer: you and every member of the party committee. Note: your parents are not liable because we have no evidence they did anything unreasonable. Note: your parents' homeowner's insurance would probably pay the damages because you are a resident of the home. However, the existence of insurance is irrelevant to liability. It merely provides funds to pay damages due. Rules for corporations. Rule: corporations are a separate legal entity from their owners. Rule: corporations have a unique tax ID number, must file tax returns, and must pay taxes. Rule: corporations are limited liability businesses. This means, the owners of the corporation have no liability for the debts of the business. Rules for LLCs. Rule: an LLC is not a corporation, it is a limited liability company, aka LLC. Rule: an LLC is a separate legal entity and has its own tax ID number. Taxation of LLCs is complicated, we will not review. Owners of LLCs are not liable for the debts of the business. Example: Brazos Bakery, LLC operates a bakery and is owned by Juanita and Sophia. Abibi is hired as an employee. Abibi accidentally put some poison into some cookies and a customer was taken ill and incurred medical costs to recover. Assume the jury found Abibi's actions negligent. Only Abibi is liable to the customer. The end. The end.